The Australian real estate crisis continues. Every month it seems as though the numbers get worse. Prices are falling further and further, slowly but surely. Even though interest rates are at rock bottom today, prices have still been very weak. This is a good example of how bubbles cannot last forever. You came here for the truth, so let me unveil that for you. This video is for my friends in Australia, but it also applies to other major areas in the world where you have bubbles aplenty. This is the type of video that tends to get very few views, but people need to understand we have a global economic condition today that is present everywhere you look. You can't just see something in Australia and think that's outside of my country, I don't need to worry about it. No, you should be paying attention to all of the news, but take a look at the views. They're usually about 1/3 of what I would get on a video about the US, but I'm going to show you the data directly from the sources today. I'm going to give you the charts, I'm going to give you the articles. Let's get into it. Australian property downturn spreads as most capital cities record falling values. This has been an issue that I have been covering for years, showing you what has happened with Australia, but also other areas around the world. This is the data directly from CoreLogic itself. I always bring you the sources if I can directly. I don't want to bring you just some news article because we don't know how they've skewed that data. At least if we have the actual source, then we have the most realistic available information. National dwelling values have been trending lower for 17 months and have fallen by a cumulative 7.4% since peaking in October of 2017. So we're looking at some serious declines here today in Australia. The bubble peaked out October 2017 in Canada. It peaked out in April of 2017, but we are seeing the same trends occurring. Prices have not been able to be maintained in many cities. This is just a few examples of that. I'm going to break it down further looking at the charts themselves. This data comes as of March 31st, so we are getting brand new information. At the top of the list, you are seeing Sydney. Now, over the last year, the prices have fallen 10.9%, and you could see on average, they're falling almost 1% every single month. So you can do a very rough calculation. If you're going to wait 3 months to sell your house, it's going to fall by almost 3%. You see how much that it's currently worth, and you can do the calculation. This is what's happening. The prices are falling pretty consistently, and so you have to make those judgments. Having said that, we can also see that the median value is nearly $800,000. This is extremely expensive, and the prices have obviously risen a lot over the years. So to see them falling by 1% a month, maybe that doesn't hurt right away, but after a year, after 2 years, this has become quite serious. All of the other cities are listed on here as well, and you will note that there is only one that is actually in the positive territory, and that is Hobart at 0.6% into the positive month over month. At the bottom, they have some additional statistics just showing you that Darwin has been the worst over the last 3 months at minus 3.9% in such a short period of time. That is quite significant. So let's move on to some other data that I have here. Looking at this change in dwelling values over the past 12 months, past 5 years, and since peaking. I thought this was really interesting because this gave us everything we need to know. So you could see it, how it has been over the last year. That's this column, as well as since peaking. We're looking at Sydney coming down 14%, 13.9 to be exact, and that is a significant fall. That's the capital city, but you might say, well, you know what, you're cherry picking. There are many other cities around, but take your pick. We can see that there are so many on this list that have not done well also, but it depends on how far you want to go back. If we look at it over the past 5 years, obviously you've seen a place like Sydney growing 23%, but that hurts a lot of people who get in at the frenzy, who get in at or near the peak, and they are now down 14%. That's not a good sign. Many people will lose their homes as a result. Many people have found themselves underwater because of what has happened. There are other places like Darwin, for example, over the past 5 years, minus 26.6%, but you have on the other end of the spectrum Hobart, which is up up 35.7%. On average, though, in the major population centers, we can see that prices have fallen. That's very clear, it's evident, and this is what you need to know. Currently in Australia, you can see that interest rates are basically at rock bottom, 1.5%. This is historically extremely low. And throughout the financial crisis and afterwards, while we have seen Australia's real estate prices climbing throughout this period of time, interest rates have been declining. And then they decided back in 2016 approximately that they would bring them down to the lowest they have ever been, 1.5%, and they have left them there ever since. They will probably have to drop interest rates even further, try to bring that down again to stimulate some more growth. They haven't done so at this point, even though real estate has peaked, but that's the admission. As soon as the interest rates have to decline, you're basically admitting to the world that you're slowing down, and so you have to do this in order to stimulate it. That's bad in a way, and so we'll see what happens, what Australia decides to do. I just wanted to show you the fact that we have witnessed during a time when interest rates have been declining, housing prices have been increasing. Now things have really been changing, not just for Australia, but for other places around the world also. Now, along with these interest rates, obviously we have mortgage rates. And I just found one of the first websites. I don't know how realistic this data is, but we'll use it as an example. The advertised rates, this shows a variable mortgage, but just to give us an idea, HSBC home loan, you're looking at 3.59% on a mortgage. Maybe it's higher, maybe it's lower. Let's take this number, maybe even let's go as high as 4%. Either way, the amount of money that people are borrowing today is excessive, even at these super low interest rates. Historically, this is a very low rate, and so we have today unbelievably massive quantities of debt that people are taking on, and it's a joke to most people. They don't even care. Mortgage default risk is the highest in 2 decades. This comes out of ABC. Perhaps more concerning, though, is that the DFA estimates that roughly 66,000 households are currently at risk of defaulting on their mortgage. That's the highest level in almost 2 decades. The defaults are rising each month at a concerning rate. We shouldn't be seeing mortgage stress rising, and we shouldn't be seeing the risk of default rising, and we shouldn't be seeing the ratings agencies reporting high levels of defaults. But guess what? All of that is happening today. Yes, it's a small percentage of the total, that's for sure. But the fact that it's rising is very concerning. You have interest rates that basically nobody should have a problem with. They're taking on too much debt, and they're finding themselves underwater. They're doing things like interest-only loans. They found all the schemes, the fraudulent paperwork. It's all there. It's all happening, and this is becoming an issue. Now, what they did say in here, I'll give you some of that positive news that everyone loves, that there aren't as many people in 90-day delinquency, and a lot of this is in the 30-day delinquency, so we don't have to worry. But I'll be coming back to you with some more data in the future, and we'll see if this is really extending onto that 90-day mark versus just 30 days. Well, we have Morgan Stanley coming out with some funny info. Morgan Stanley says that likely reflects seasonality rather than the prospect prices may soon bottom. Well, you don't have to worry about it. Everything is gonna be a-okay. There's nothing to worry about. This is the type of information we are always getting. They're trying to predict where is the bottom because you don't need to worry. The prices will go higher and so on. As far as I'm concerned, we've seen a trend that's been going on since 2017. Call it what you want, but even with low interest rates, they haven't been able to turn it around. Yes, they can drop interest rates all the way to zero. They can make those mortgage rates go down to basically nothing, and still, it will not fix the problem. You cannot figure this out if you're using the same things you've always done. It's not going to ever fix it. Just look at how bad this has been over the last while. Prices have fallen further than past cycles. You can see the black line shows you September 2017, and then just all the different ones, whether that's from 2010, 2008, 2004, 94, and 89. Look at this black line here. As you can see how far it has fallen in a relatively short period of time. This is the amount of months, and it gives us maybe about 17 months since here, based on this chart it looks like 16, 17 months. And then on the left-hand side, house prices percentage decline from the peak, and that goes down. It's showing us over 8%, almost 9%. But I mean, this is giving us the CoreLogic data. I don't know exactly when this goes until, but regardless, we know the details. I showed you the data itself from CoreLogic. So it just gives you an idea of this compared to the previous cycles. That's all. Australian home prices are falling after a long boom. The housing market in Australia did not see the severe boom-bust cycle that the US experienced as part of the global financial crisis, although the market has softened lately. And I'll show you this from back in 2003 up until today, comparing the US and Australia. Whereas Australia, just like Canada, experienced somewhat of a softer moment, and the prices came down a little bit on average, but basically, for the most part, they have been rising. Whereas in the United States, as you can see, prices really fell. There's no doubt about that. And they have risen ever since to new highs. In Australia, the peak was experienced right here back in 2017 and has been falling ever since. We'll see what happens. The government has a few options on the table. They can reduce interest rates to zero. They can give out negative interest rates. They can print some money. They can offer some sort of tax cut. They can offer new home buyers some incentives that have never been given before. There are other options out there. Of course, you're blowing the bubbles up further and further, and it's only going to make matters worse in the long term, but nobody ever cares. Assessing the risk of the next housing bust. This is an IMF article. Just wanted to touch on a couple points. In the third paragraph, they said something that I just wanted to highlight because it's something that I do touch on occasionally, but wanted to bring it up in this video specifically. Why do home prices matter for the broader economy? Housing construction and related spending on things like home improvements account for 1/6 of the US and Euro area economies, making them among the largest components of GDP. What's more, mortgages and other housing-related lending are a big part of the bank's assets in many countries, so changes in house prices affect the health of the banking system. That's why it's important to follow what's happening in real estate. Many people, they don't even care. They don't understand that if it affects the financial establishments, that's going to put a big weight coming down on the other companies as well. There's not this sort of separation in between different sectors. If one sector gets a cold, the other one is going to get the virus. I'm telling you right now, that's the way it always works, but many people do not want to ever acknowledge that. But every time, every cycle, the same thing happens. The contagion spreads, and it spreads far and wide. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a like on the video, you are supporting me. You're supporting this channel, and you are supporting the truth. So I do appreciate all of that. If you want the financial information that was not taught to you in school, the education that was simply left out intentionally, these two books have everything you need, from the foundational principles, the history, the asset classes, making money, everything from A to Z. Check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to find out about the global economic contagion that is affecting real estate, watch this video. I talk about different countries in here, and I think you'd be interested in it. Click on it, and I will see you there.